Hello, friends. Are you entering into trades which you thought are the sure thing, but then unfortunately, those trades are resulting in losses? If yes, I'm going to help you counter that situation in this video. I'm Vijay Bambwani. I've been trading these markets since 1986, and I use what I called behavioral technical analysis. I pioneered this. I've taught this at exchanges, in universities, and to corporates. And I'm going to help you break down a trading session so that you can basically take care of the time element. Do you know there are friendly and unfriendly times to trade in the market when predators, very large, smart money, is present in the markets like algos, vulture traders, dark pools, whose job it is basically to deploy tons and truckloads of cash so as to influence the price, either push it up or pull it down so that your stop losses are getting hit first and your targets are coming later. This leads to extreme amount of frustration in a trader, and what he starts to do is to doubt his trading system. The trading system is not wrong. The time of entry or order fills was wrong. So in this video, I break a trading session into friendly and unfriendly zones. And if you start to trade in the friendly time frames, you'll be a much better and much more profitable trader. So here goes. On your screen now, I have basically demarcated the first 10 minutes from 9:15 a.m. to 9:25 a.m. In reality, the market actually starts trading at 9:15, even though the rates may get refreshed at 9 o'clock, but this is pre-open. The actual transactions start taking place at 9:15, and the first 10 minutes are dominated by the trades of BTST and STBT traders. Now, what are these traders? These are traders who've initiated or entered trades in the final few minutes of the previous trading session. BTST would mean buy today and sell tomorrow, which means they were expecting the market to go up and they will sell at the opening of the next day, irrespective of the fact whether the market is up or down. And STBT are short today, buy tomorrow. These guys were expecting the market to fall and they enter short sales in the final few minutes of the previous trading session, and irrespective of the outcome, they will square up their trades in the first few minutes of today's session. These guys are like professional IPO or initial public offering investors. Professional IPO investors sell on listed day irrespective of profit or loss. So therefore, the first 10 minutes of trading is extremely volatile. Prices are jumping all over the place and you don't know what's happening. If you were to chase the price and enter into a fresh trade between 9:15 to 9:20, or to be on the safer side 9:25, chances are you could be sucked into the trade at the wrong price. So your trade setup is right, but the timing was wrong. You entered into the wrong time and at the wrong price, and therefore you have a huge disadvantage. Hostile time period number 2, lunch hour. Now this is when vulture traders, algo systems and dark pools are operating at their best. The reason is majority of the traders have broken up for lunch. They're taking a lunch break. Volumes tend to be down, and the bid and offer spread, the difference between the buyer's price and the seller's quote, is extremely wide. So a little bit of buying or little bit of selling can result in huge price moves, and your stop losses are getting hit first, your targets are coming later. Now these algo traders, vulture traders and dark pool investors are not interested in rolling their trade over to the next day. They just want to get in and get out intraday, which is why the price that you think would come as a target will come, but prior to that, your stop losses will get hit. So do not trade between 1 to 2 p.m. That is when the volumes are thinnest and volatility is the highest. Between 2:30 and 3:30 p.m., institutional order fills are taking place. The reason being, a seasoned technical analyst will know that the closing price of the day is invariably the most important price of the day. All the intraday traders are squaring up their positions and the price is settling to what is a more realistic price relative to the opening price. So institutions tend to fill their orders towards the fag end of the day rather than chase the price in the initial 10 minutes. They are smart enough to know what I just told you. The first 10 minutes are dominated by BTST and STBT traders. Lunchtime is by algo, vulture, and dark pools. So institutions play safe and are active in the final 1 hour, which is what you're seeing. Sometimes the market is up throughout the day, but in the last 1 hour it is down, or vice versa. It's down all day long, and in the last 1 hour they basically climb up. That's institutions. With the sheer size of their order, with the sheer money flow, they can swing the price absolutely sharply. So be very careful. And the final 10 minutes of the day, 3:20 to 3:30, or to be even more precise, 3:25 to 3:30 p.m. Now this is when BTST and STBT traders are sinking their teeth into the trade and they are preparing for the next trading session. So they enter a trade today to be able to square it up in the first 5 or 10 minutes of the next day. Now here again, volatility will be high. Now, you know what are hostile times. Are there more friendly times to trade? Yes, which is what this video is all about. I'm here to help you. So, the friendly trade time number 1. Now, this time zone is where majority of the volumes and majority of the open interest is created. Now, between 9:25, which is after the first 10 minutes, to 1 p.m., which is lunch hour. Now, these 3.5 hours is when intraday traders enter fresh positions. Micro trend traders are traders like me who do not like to sit into a trade for more than 59 minutes and 59 seconds. Every hour, they flip their trade around. And you have swing traders who enter into a position today, not necessarily squaring up on the same day unless they get the price. And if the price doesn't come, they might even roll their position to the next day. So between 9:25 and 1 p.m., these relatively safer traders are operating and therefore the prices are more stable. They are more calm. This is a time when you have the highest probability of success. I have recorded a video in the past wherein I have taught you how to maintain digital trade logs. Now, this video is found here. The hyperlink is in the description below this video. It is in a pinned comment below the video as well as in the end screen of this video. Now, if you were to implement the digital trading log system, you will log in your entry time and exit time, and you will know which time of the day is best profitable for you. Now, whichever time is where your maximum amount of trading profits are coming, you will like to focus on initiating or entering fresh trades at that time. Personally speaking, the most profitable time period for me is between 9:25 and 1 p.m. I have found the maximum trading profits in equities coming in this time frame, a friendly time zone. Now, friendly time zone number 2. Between 2 and 2:30 p.m. Now, this is again when lunchtime is over or almost getting over. Algos, vulture traders, and dark pools have done their thing. They've impacted the prices, and prices are getting quieter. So, professional intraday traders, micro trend traders are coming back in the market. They are basically trying to get out whatever little profit is left before the trading closes for that particular day. But volumes of their fresh trades will be lower. And if at all an intraday trader's open positions are still open, they will focus more on closing or squaring up their position. So there will be a little bit of unwinding. Now, on a routine day, if the market has been bullish throughout the day, you will realize that towards the last half an hour or 1 hour, the price will fall a little because intraday traders are booking profits. Or if the markets have been down throughout the day, you will realize on a routine day, the prices will go up a little because squaring up is taking place. What happens if the trend remains till the final minute of the day? It's been bullish throughout the day and it's bullish even up to 3:30. Hey, that means all the supply that the sellers are giving is getting eaten up. If you played a game of Pac-Man, you see how relentlessly Pac-Man keeps eating those round dots, which means all the selling is getting absorbed and tomorrow might be a bullish day, all other factors remaining constant. Now, 2 to 2:30, trade light, try to get in and get out fast. Don't try to make above average amount of profits. Hey, I'm just telling you what I do, all right? Between 2 and 2:30, I trade light. Whatever little bit of topping that I want over the profits that I've earned between 9:25 and 1 p.m., I'm just trying to add a little bit more to it without excessive amount of greed. All right. Between 2:30 and 3:30, the institutions are there. Between 3:20 and 3:30, the BTST and STBT traders come back and create even more volatility. So friends, I hope this video helps you improve your trading P&L, profit and loss account significantly. If not, I am answerable. Always come back to me. You have my social media contact coordinates, which will come at the end of this video. Give me a shout. Let's help each other become better traders and let's get the job done. Before I sign off from this video, I request you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. And good, bad or ugly, I would love to hear from you in the comments section. Also, please help us out to reach out to more rational, logic and knowledge-based traders by referring my video to your family and friends. Thank you for your patience in watching my video and staying with me till we meet again in my next educational video. This is Vijay Bambwani signing off for now. I wish you have a very, very profitable day ahead. Bye-bye.